If you've never bought any gold, now is not the time to start. If you already own gold, fine, you can hold on to it. Just don't buy any more, not above ground. Buy the gold mining stocks. Now, the plan would be wait for the stocks to make the initial big move. I think they got to at least triple, minimum, to kind of get to where they should be. So let's say you make this investment in gold mining stocks instead of physical gold, and then the stocks triple. Now you could sell some of those stocks. Maybe you sell half. But if you triple your money and you sell half, right, you still got 50% more than you started with, and then you own the gold stocks for free. Then you can take that money and buy gold. And even if gold's gone up 50% during that time period, well, you got 50% more money to buy it. So you got the same amount of gold, but now you got, all of these gold stocks that you own that you didn't even pay for, because you're basically on the house's money, because you cashed out all your original investment and you put it into physical gold.
Peter Schiff, veteran economist and outspoken advocate for sound money, has been championing physical gold since it was under $300 an ounce. With gold soaring above $3,000, Schiff highlights an unusual market disconnect. While gold has surged 10 times, gold mining stocks have severely lagged. The reason? Central banks, not retail investors, are driving the demand for gold, leaving mining stocks in the dust. Schiff argues this creates an unprecedented opportunity as gold miners trade as if gold were still under $2,000. Investors can buy gold in the ground at a steep discount. According to Schiff, mining stocks have the potential to multiply 5 to 10 times as sentiment shifts and retail investors wake up. He urges those who've waited too long on physical gold to pivot to the miners instead. Now, we present the latest clips of Peter Schiff's video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I've been advocating for a long time that people buy physical gold, right? And since I started recommending physical gold, it was under $300 an ounce. It's now over 3,000. So you've got a 10x. But while gold itself has gone up 10x, most gold stocks aren't even close to those returns. There are a few, but the vast majority have barely moved, especially in the last year, as gold has gone from 2,000 to 3,000. You've seen no interest really in the gold mining sector. And the main reason for that is because the public hasn't even been interested in gold. It's central banks that have been buying gold as they've been de-dollarizing. And based on what Trump has just done, I think foreign governments are more likely to want to get rid of their dollars and their treasuries than they were before. We've made it clear that we want these trade deficits gone. We've also made it clear that we're not willing to defend the rest of the world. We want to make them pay for our defense. Well, what they were getting, one of the things they were getting for subsidizing our trade deficits and loaning us money and supplying us with goods, is that we defended them in case they got into trouble. Well, if we're not going to do that anymore and they've got to pay for their own defense, then why are they propping up our economy? Again, Donald Trump kept saying that the world was screwing us over and taking advantage of us. He's got it backwards. It's America that's been taking advantage of the world because we rely on the world to live beyond our means. But the world can only finance that by living beneath its means. Well, that's going to change. It's going to change because the dollar is going to go way down. And so we're going to consume less and the rest of the world is going to consume more. And that's how our trade deficits go away as our standard of living declines. But in the meantime, the world is getting rid of dollars in advance of a major depreciation. One of the things that all the experts got wrong, they all thought the dollar would rise if we imposed tariffs. Instead, it tanked. The same way they thought that interest rates would fall if the economy weakened, instead they surged. So the experts still don't understand what's going on. But that's the reason that these gold stocks are still so cheap. All last year, as gold rose 50%, typical Americans were selling their gold. And they were selling gold stocks. In fact, this year, in the first quarter, GDX is an index of gold mining stocks. And only one day in Q1 were their inflows. Every other day of the quarter, there were net outflows, meaning as gold was going up basically every day, retail investors were selling their gold stocks every day. This is unprecedented. Normally, when you're in a gold bull market, and this is a powerful bull market, normally the stocks lead the metal because stocks are forward looking and investors get excited. They anticipate higher future gold prices, which means even higher earnings for these gold companies. Because as gold prices go up, it has a disproportionate impact on the earnings of gold stocks. So normally, if gold goes up 10%, gold mining stocks might go up 20 or 30%. But what's been happening in this bull market is that gold has actually been going up more than the stocks, and gold has been dragging the stocks. The stocks always sell off every time gold has a small correction because everybody thinks the market's topped out. In fact, I've done several interviews this week about gold, and people keep saying, well, is it too late to buy? Is it a crowded trade? It's not crowded at all. How can it be crowded if no one's bought it? The only buyers are the central banks. That's why the stocks are still so cheap, because central banks don't buy gold stocks. They buy gold. That's also why silver is cheap. They're not buying silver. The public buys silver and they're not buying it. So silver is still barely above $30 an ounce. But right now, the real opportunity isn't in gold or silver. It's in the gold and silver mining companies. Because when you invest in a mining stock, you're buying gold and silver. You're just buying gold and silver that's still in the ground. See, when you're a shareholder of a gold company, you own a little bit of all their gold reserves. And the way they generate income and pay dividends is they take some of that gold out of the ground and they sell it. But they still have a lot of gold left in the ground. And they still have exploration and development projects to replace the reserves that they lose. But I've just prepared a special report. And the case that I'm making is that gold in the ground has never been this cheap relative to gold above the ground. So given that, when you can get such a good deal on below ground gold, you still own it, it's just in the ground. Now, sure, there's some more risks inherent in owning a mining company rather than just owning the gold after it's been mined. But right now, the upside potential, the reward for assuming that risk is so disproportionately and unprecedentedly high that it makes sense that that's where you focus your attention. So if you haven't bought any gold, if you've been following me all these years and now gold's at 3,000 and you're thinking, okay, finally, Peter, you've convinced me I'm going to buy some gold. Don't do it. Right? Buy the mining stocks instead. This is how you turn back the clock, because the mining stocks are not priced for $3,000 gold. They're not even priced for $2,000 gold. So it's like buying gold at 2,000, except it's at 3,000. So even though you missed the boat, right, you can get back on. Now, you didn't miss it in the sense that I believe gold is going higher. I think gold's going to 4,000, 5,000. But you'll make a lot more money, I think, if you buy the mining stocks now, because the move from 3,000 to 4,000, that's about a 33% move. I think gold stocks could go up 5 or 10x on that move to catch up to where they should be as the naysayers throw in the towel and people finally start recognizing the opportunity that they've been oblivious to. Right? Normally, you have enthusiasm and excitement. All you have is naysayers and negativity and fear. The gold bull market has been climbing the mother of all walls of worry. And the best opportunity is therefore in the mining stocks, because while the public's been asleep, the foreign central banks have been buying. And they're like the insiders, right? It's like insider trading. They're the insiders of the fiat monetary system. And they know that the dollar's days are numbered. And so they want to get rid of as many dollars and as many treasuries as they can and buy gold. So rather than compete with them in buying gold, just buy the gold mining stocks that they're not buying, but you know that they will buy the gold once it's out of the ground. So you are buying a gold mining company knowing that you have a huge buyer for your product, because the central banks around the world are going to buy all that gold as soon as it comes out of the ground. And the same thing is true with silver, although right now the central banks aren't buying that yet. But that is the real opportunity, because you don't have to compete with central banks. You just go in there and buy it. So if you've never bought any gold, now is not the time to start. If you already own gold, fine, you can hold on to it. Just don't buy any more, not above ground. Buy the gold mining stocks. Now, the plan would be wait for the stocks to make the initial big move. Now you could sell some of those stocks. Maybe you sell half. But if you triple your money and you sell half, right, you still got 50% more than you started with. And then you own the gold stocks for free. Then you can take that money and buy gold. And even if gold's gone up 50% during that time period, well, you got 50% more money to buy it. So you got the same amount of gold, but now you got, all of these gold stocks that you own that you didn't even pay for, because you're basically on the house's money, because you cashed out all your original investment and you put it into physical gold.
Peter Schiff urges investors not to chase above-ground gold at record highs. Instead, he recommends focusing on gold and silver mining stocks, where the real upside lies. His plan: ride the rally in mining stocks, then roll gains into physical gold later. Central banks may not buy gold stocks, but they will buy the gold once it's mined, meaning savvy investors can front-run demand at a massive discount. Share your thoughts on Peter Schiff's analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.